Now we are discussing about business options in that dividend stocks. Shareholders in companies with dividend yielding stocks receive a payment at regular intervals from the company. Companies pay cash dividends on a quarterly basis out of their profits, and all you need to do is own the stock. Dividends are paid per share of stock, so the more shares you own, the higher your payout. But one thing I observed in my experience is dividends are coming commonly very well, but it should not be more than 6% or 7% or 8%. But more than 7%, so many companies are not giving dividends because they will take always think about what is the interest rate of that banks. If banks are giving 9%, they will give 8%. Such comparison also they will be there. It will be there. So always compare all these things, and dividends are very good. But at that one advantage is also there. Certain shares will be there. They will be purchased at the rate of 100 rupees per share. But after 5 years, it will be 1000 rupees. The dividend will come on face value or market value. By that also dividend will be changed. So if you think all these things, then only you can come into this business. And next point is opportunity. Since the income from the stocks is not related to any activity other than the initial financial investment, owning dividend yielding stocks can be one of the most passive forms of making money. The money will simply be deposited in your brokerage amount. Risk is the tricky part is choosing the right stocks. For example, companies issuing a very high dividend may not be able to sustain it. Gives Graves warns that too many novices jump into the market without thoroughly investigating the company issuing the stock. You have got to investigate each company's website and be comfortable with their financial statements. Graves says you should spend 2 to 3 weeks investing each company. And another advantage is also there for purchasing stocks. Suppose State Bank of India and very big popular companies will be there. In those companies, in the year, suppose 2022, your purchase per share is around 3000 means in after 2 years it will be 4000. But dividend may come same value, but the stock value will be increased. By that also you can earn a lot. All these things you should think over, whether it is increasing according to the bank rate of the rating system, otherwise how much they are giving interest rate, and the value of the stock is increasing in which way. All these things you should practice, and you should understand, you should read, and then only you can come into this stock business. And next point is that said that there are ways to invest in dividend yielding stocks without spending a huge amount of time evaluating companies. Especially in dividend yielding, almost all stocks are depending on the market value only, but not on the dividend what they are getting for the investment. Graves advises without exchange traded funds or ETFs. ETFs are investment funds that hold assets such as stocks, commodities and bonds, but they trade like stocks. ETFs also diversify your holdings, so if one company cuts its payout, it doesn't affect the ETF's price or dividend too much. Here are some of the best ETFs to choose from. So this is the information. You should be very careful. Only dividend stocks if you purchase means don't depend on dividend earnings, because it is something there will be a very very vast changes will be there for your investments and getting dividends. But the stock values will be increased definitely. Suppose one share is in the 2 years back, it may be 1000 rupees, but nowadays it will be 2000 or 3000 also. Likewise, you will get in market rate, if you want to sell out, the share value will be increased. But only one thing is, only if you are depending on dividend rate means dividend on 1000 rupees value after 2 years back, that value is 1000 rupees. The same dividend also will come now. Even after market rate is increasing also, the same dividend rate will come. That time it is a problem. So always 50% is not 50%, 80% of the people are depending on the stock rates. What is the market value of stock rates only? But dividend is also a important thing. But both edges you should justify and to think over and to take the decision. Then only it is profitable. Wishing you all the best.